When analyzing stocks, I spend most of my time looking at value plays because I view them as more established companies that carry less risk. At the same time, if you can pick the proper timing, value stocks can act like growth stocks when they break out of a downturn and provide huge rewards. But since I spend most of my time looking at value stocks, I'll bet you think I'm just a square. Let me prove you wrong. Let's take a look at a growth stock. Square peaked at about $80 per share a while ago, but is now at about $68 per share. The downtrend increased in early May when the company reported first quarter results and a second quarter outlook that trailed consensus estimates. Not good for a growth stock. However, through the first quarter, Square enhanced its omni-channel offering by launching the Square Online Store. This will take online and in-person data, seller items, orders, inventory, and prices, and synchronize them. With the global launch of the Square Online Store, the company expands its market. In Japan, Square launched Square Stand and a Square Contact Person chip reader. This enables sellers to pay wirelessly. Processing payments is as easy as connecting a Square reader to an iPad device. Additionally, the company launched Square Invoices, which should accelerate full-year revenue growth. Square Invoices has already processed over $5 billion in gross payment volume in the last year. As a result of this growth opportunity here, Square raised its full-year outlook. Square increased its fiscal year 2019 revenue guidance by $60 million to a range of $2.25 billion to an upper end of $2.8 billion. However, this did not seem to impress the market as better numbers were expected. On the other hand, its Cash App performed well and contributed to an adjusted growth rate of 59% in the first quarter. The company will also build revenue momentum based on strong monthly active users. In the fourth quarter, the company reported 15 million monthly active users. The success of Square's Cash App should be a positive catalyst. Cash App volume grew by 2.5 times in the first quarter. With other engagements, revenue growth could exceed the company's forecast for the year. With anticipated lower costs of monthly active user acquisitions, and then adding instant deposit, cash card, P2P funding through credit cards, and cryptocurrency, markets may realize Square could potentially report yearly results above forecasts. So now let's take a look at our charts. We're looking at the monthly chart on Square Inc. And this chart only goes back to say late 2015 because it's a relatively new company. And Square Inc. has a symbol of SQ. For disclosure purposes, I do not own any shares of SQ at this time. The recent high was 80, but the all-time high was 100 at that point there. Now, the stock came down and bounced off 60, which coincidentally was the 20 EMA. It's currently at 68.46, but going back to, say, early 2016, it's had a pretty good move on the way up. Yeah, let's get a little bit of roller coaster here, but that's not any big deal, at least in my mind. We're looking at the oscillators and what they show. The MACD is a fast line move through the slow line there in early 2019, but it looks like the fast line is still accelerating on the way down. But the slow line is very stubborn and it's moved down. So just keep an eye on that. Because the fast line is continuing on down, it's not ready for us to consider this as an investment at this time. Just follow this. The histogram shows a continued downtrend as well. And then the price rate of change, what happens to be one of the more favorite oscillators of mine. It looks like it's started doing some sawtoothing there. It's going to do another one here. But let's see how that sort of bottoms out and wait for that fast line sawtooth to move above the slow line before we really consider investing in that. The RSI is at 53.07. It's near this midline here, bounced off once and twice. So it does want to start a bottoming process. So we'll keep our eyes on that. Stochastic's not quite bottoming yet, but I can imagine that it's going to start to develop a base here in this area and watch that, say, over the next few months, maybe a couple of quarters or so. Volume looks fine, nothing wrong with that. Williams showing us what, like these stochastics just showed us, it's attempting to bottom here in this area, but I think it's going to take a few months and maybe a couple of quarters. But for a growth stock, it doesn't look too bad. You don't get growth stocks cheaply. You might be able to get this one fairly cheaply, but it's just going to take some patience, watching how the oscillators move and waiting for the prime opportunity. Something else to take a look at here, a traditional technician is going to see this pinch point with that pennant moving here, or triangle or diamond, starting to move into this pinch point. So there's a possibility with all the technicians looking at this thing that this might squeeze one way or another, either up or down. So at this point in time, the oscillators are telling me it's still down. So I'm going to run with what they say for now, at least, and then be patient and watch square. So for today, that's Two Dog Charts. Thank you.